Okay, can you hear me now? One, two, three. Just type in the little chat thingy if you can hear me. Just want to make sure everything is working. It's a new setup for me. It's on my laptop. Had to do some updates. Just give me 1 second here. Just want to verify you guys can hear me. Okay, good. You can hear me. Wonderful. All right, welcome back. 2021. Thank God 2020 is over. Let's kind of set our goals for this year. And I think the goal for this year is going to be that um, we have to focus more on the risk rewards trades. Not so much worry about how much money we made per week, per day, per month, whatever. Um, at least that's the way I approach things always. Always, well, since I started doing it this way. Um, you know, the risk is the most important thing in anything we do when it comes to trading money. And um, when you when you have that in mind, that you'll be patient when it's not clear that you're not going to take the trade, or you are going to take the trade, knowing that if you lose, you know where you're going to stop out and so forth. Um, I think that's going to be the most important thing, because ultimately, what is happening in the markets is you have asset price inflation everywhere, everywhere. There's not a spot in any market that is not booming, and the economy is not. In fact, the economy is doing the opposite, and you're going to hear a lot of nonsense. How well, wait to see, um, it's going to be better when the vaccine comes out, when this comes out, when this. No, This is a mistake because you don't know what the long-term effects are. Neither do they. They give you all these kind of projections. Um, they've been writing the same theme now for 11 years. Buy the dip, buy the dip, buy the dip. No one is considering um, the alternative. Um, and everything is based on buy the dip. And when that happens, um, you're in big trouble. No one cares about trillions anymore. See, the nominal amount of money that is being created and QE'd and lended out, uh, no one considers that. We don't even care about that anymore. Nobody cares about that anymore. We don't care about earnings per share anymore, right? So the politicians are going to do what politicians do. They're going to try to cover it up. They're always going to try to cover it up, and they're going to use the tools that is available to them that work. Not in the real economy. It doesn't work in the real economy. It works in asset prices. They're using the barometer to show that, hey, look, this barometer is showing it's good. The markets are going up. Therefore, everything is good, right? It's like me taking a fire button on my airplane and it's flashing red, and I say, "Oh wait, let me take out the light bulbs. Look, there's no, there's no fire. There's no light. It's fine. Let's keep going." Um, so, if there's anything we learned from Trump, is that there's a lot of people that are stupid out there. There's a lot of people that want to believe whatever the fuck they want to believe. Okay, and it's no different for Trump, the markets, and anything else in life. They want to believe whatever they want to believe, and they try to create this reality, alternative reality. And that's how you end up with bubbles, right? So, you know, often when I talk about that, we're heading in the wrong direction, running in the middle of the dark towards a cliff. It doesn't mean that it's going to explode. It's not going to explode. It's not like everybody's going to run out of money or something. There's not going to be an economy tomorrow, or there's hyperinflation, or whatever the fuck. They do that in order to ridicule, to make it extreme, to make it so implausible, to make it seem like, oh, that's just stupid. That's what the ignorant people do. Okay, it doesn't work that way. Now, I've been so fortunate as a pilot to have lived in many different economies and lived them, not just flown to them and go in a five-star hotel and look outside and say, oh, look how wonderful it is here. Oh, look how great things are. No, I've actually lived them. I lived in Greece, I lived in Dubai, I lived in the Philippines, and obviously the US. And what you see is each economy is at different stages. And when you're someone like me who tries to understand the economics behind this, what's the driver, what is going on, um, you tend to see things differently. Like it or not, you're going to see things the way um, most people don't see. They're not going to see that in Dubai there was a great expansion, right? They invested a lot of money in creating malls, skyscrapers, townhomes, single-family homes, um, entertainment, roads, bridges, right? It was wonderful, and it was like, wow, this is the way MMT works, right? Who cares about the money? Who cares about how much we print? Because there's economic activity, there's growth, and that's the initial kind of reaction, right? But as time goes on, and you start to see that the population growth rate starts to flatten out, that the amount of malls being built and restaurants and theme parks and whatever starts to become too much, and you start to see that homes are not really selling the way they should. that they overbuilt, that they overdone it. And then you look at the stock market, right? It's not doing what it's supposed to be doing, and it just kind of flattens out, and then everything stagnates. Doesn't mean that Dubai is not a beautiful place. It's a great place. It's a rich place. Sure. But economically speaking, all that money that was invested and thrown at it, and people went out and bought homes, and they were flipping them and flipping them and flipping them, that it can go on forever. It doesn't. At some point, it stagnates. It stops. And that's been going on since 2016. So that's one kind of economy, right? That's a rich economy that's stagnated. And then you have the other kind where in Greece, right, we went through the great financial crisis. I was there for that in the beginning of it. And you saw that people were losing their jobs. Didn't mean that Athens blew up and everybody's homeless, right? It's just food became more expensive. And that was true even before the crisis. But uh, the jobs were not abundant. The place sustained itself, but there was a lot of closed stores, right? The whole entire economy shrunk. And people started using their savings. And, they started selling their assets to sustain themselves. And then you would see GDP growth. It would drop and drop and drop and drop, right? But people still lived. They still went to the beaches. Still went to go have coffee. They still did the basics, right? But the growth was not there anymore. They weren't going to Switzerland for skiing anymore, for example. Uh, they were not taking shopping trips to the U.S. like they did before. The pensions started to get cut off. Taxes were raised, and it led to this stagnating new economy, new relative to what it was prior to 2008. So again, you would see on paper it was catastrophic, but on the ground it's just people spend less. It didn't blow up, is what I'm trying to tell you. And then you look at something like the Philippines, 110 million people. And all these people, they are mostly poor. And the whole entire economy, when you look at it on paper, is really based on one city. And within that city, only a few million people. Whatever their economic activity was, and that's what is being measured, not the rest of the country, because their income is so low, the economic activity is so low that it's not even measurable really. Um, so everything is relative. Everything is relative. So the United States, yeah, we're the greatest country in the world. We're this, we're that. We're going to print. We're going to give money, demand side economics, and so forth. Um, and we've seen that now, something that I never thought I would witness, right? And we've seen it. And where's the economic growth? Where is it? It's non-existent, right? We are measuring from a lockdown to not a lockdown. And we're saying, look, it's great. It works. No, no. You can't measure from a lockdown to not a lockdown. Um, well, we're the world reserve currency. Okay, fair enough. But look at China. Look at Asia. Asia is doing far better than the U.S. Are they so? Remember the saying that, oh, if the U.S. hiccups, the rest of the world catches cancer. Remember that? Well, that's not the case now, is it? No, it's not the case, right? So economically speaking, there's things that are changing. Um, and everybody's looking at the stock market and looking at the price and saying, look, it's great. America's great. No, it's not. There's a lot of fundamental problems. And everybody's being trained now for 11 years to think that, buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. And it's always going to be like that. And no one is considering what the risks are. And when it comes, how they're going to deal with it. And they're going to get hurt. They're going to get chopped up. They're going to get destroyed. And remember, I keep saying this. I've only lived through 2 recessions. Barely conscious on the second one, not conscious on the first one, right? I'm talking about 2000. And then 2008, barely conscious. Right? This time around, when it comes, I want to be ready. I want to be ready to deal with it properly. And this little sell-off that lasted 32 days, right, was just which was a good way for me to learn a lot. And that's what happened in 2020. I learned a lot, even though I made a lot of money initially. Right, I went from 100,000 to 860,000. Uh, you know, that was great, but it came all back. Gave it all back as a loan, of course. Anyway, so let's go look at the markets. We're going to start. We're going to do this live stuff. I don't know how long I'm going to do this. All right. Um, One day I'll decide not to do it, and then I won't. So take advantage of it while you can. It's completely different than everybody else thinks. Remember, everybody is thinking through two options, right? Options that are offered to them by media, by uh, conventional ways of doing things. And what is a conventional way? Well, the conventional way has been the last 11 years, right? But I don't think that's going to last. It doesn't mean that the market won't go higher, and I will explain it to you here in a moment. But you will see um, that what I'm telling you right now doesn't necessarily jive with what I'm going to show you in the charts. But I want you to be aware that this year you want to focus on risk reward. Okay? I want you to focus on that. I want you to focus on what kind of market that we're in. Are we in a parabolic, you know, straight up market? Are we in a wave market? Right? What's going on? Right. So let's start with the equal weighted S&P. Right. The market is open now, right? Of course. I'm ranting. All right. Market open in 15 minutes. And I don't have my drawing tool yet. I didn't put it on, so bear with me. All right. So we get that breakout here. All right. All-time highs and equal weighted S&P. Dividend weighted S&P is pushing a little bit higher. The VIX popped a little bit. Okay. They don't know if portfolio managers are going to shift the way they trade or what the deal is. So that's the way I'm looking at the VIX right now. I'm not looking necessarily at risk. They're just cautious on what's the market going to do in the first couple of weeks. So many people have hedged until they get a feel for it and then go from there. So don't read too much into the VIX. The NYSE, right, breaking out, continues to push higher. Dow Jones pushing higher, pulling back a little bit. S&P 500 is pulling back a little bit. Okay, now here's what I want you to focus on. That let me go out a little bit here. Okay, so we had the big bump. We went sideways. We're breaking out. This rising F flag in the manner that it's rising can last a long time. Okay, it can last a long time. It can stay in here for quite a while. And this is important because number of reasons. One, the bias right now is long, right? It's bullish, the bias, because of this channel. The other aspect is we have moved away from the previous high sufficiently where the risk reward now is to the upside. It's in open waters, right? They keep pumping in trillions of dollars and trillions of dollars. And there's going to be more trillions of dollars coming. So you're in open waters, and we know that when you create money out of thin air, it's going to ultimately end up in the savings bubble, and that savings bubble is going to push asset prices higher. That's where the asset price inflation exists. So again, when it's this slow, grindy kind of up, these are the kind of markets you want to buy. Okay? NASDAQ, very messy. Same thing. All-time highs broken out. It's off to the races. Okay? So long as it remains, above. Come on. So long as it remains above this trend line. It's a once again, it's in the channel and it's breaking away. There's no double top now. It's not even a consideration at this point. You just keep making higher highs slowly. Small caps, they got a little bit ahead of themselves. They came up against resistance. They had some volatility in here. One of the best ways I think I'm going to trade this going into the new year is I would like to short this and buy NASDAQ. I think that's a good little hedge. I'm not looking to make a whole shitload of money. I'm just looking to reduce risk, be on the right side of the trade for now, okay, and see where that takes me. There's a little, oh come on, I gotta get my little tool up here. And by the way, I'm in Ukraine now. I'm not in the U.S. So my timing is different in terms of when I can do videos and so forth. Anyway, we have this little bear flag thingy going. Okay. So remember, small caps are risk on. Okay, so the risk on is kind of like pausing a little bit. It's creating a bear flag. Maybe this will start to correct, but it will probably correct more so than the NASDAQ. And I'll show you later why I think that is. Transportation averages, still not doing a whole hell of a lot. It's still in a bull flag. Okay. Let's look at IPOs. Now the IPOs have been red fucking hot. Okay, red hot. I think they were up 100, some crazy amount. Let me see. 242%. I mean, fuck. Right. This is an ETF. The ETF buys IPOs. I think it's a certain market cap, but I'm not sure. And they hold those IPOs for 2 years. Okay. And this thing has been on fire. Fire. Absolute fire. But now it's starting to test this trend line. Let's see if this continues in 2021. Let's see if this starts to break down. So it's going to be interesting. It's the same thing with ARK, right? This is all technology. It's IPO kind of stuff. Google and the FANGs. Now remember, this has been stuck for quite a while now. And it's in a wedgie formation. I don't necessarily like wedges because they move in one direction and then they do the opposite. So, for example, let me see. So they'll stay in the wedge, break out, and then do the opposite. Okay? So we'll see how this is going to end up. Right now, it's still going sideways. Europe has been the catch-up play. Oops. It has been the catch-up play. There's a lot of value in Europe relative to the U.S. that hasn't made crazy moves. Right? So you look at it from a weekly perspective, it's got some ways to go to the all-time highs. All right. Right now it's a little bit too vertical for me. It is breaking out, but at some point I expect this probably to pull back and then start to bounce again. So we're going to keep an eye on Europe this year. All right. I'm not going to give projections as to what I think is going to happen, and I think that's just nonsense. I mean, it's great for theater, but nobody knows what's going to happen. UK is out of the euro, thank God, and it's doing good. Right. Again, this is going to be a catch-up play for the UK. Germany, right? Testing all-time highs. Look for this one also to push higher. In fact, I would expect Germany to lead, right, along with Denmark. And Denmark has just been on fucking fire, right? So these two countries are going to lead Europe on the catch-up play. This is the World Stock Market Index, right up against resistance. So again, indicating that we'll probably have some kind of a sideways move to maybe a small correction, and then we'll see how it
Auto shutdown
behaves.
initiated.
Oops, hold on.
Auto shutdown cancelled. Mic off. Mic feedback off.
All right.
Mic on. Mic feedback on.
Yeah, I haven't adjusted the headsets yet, so yeah, we're gonna have to deal with that. Unfortunately, I'm gonna have to turn it on and off. All right. So yeah, let's see how this is going to start to work out. All right, let me fix this here. All right, wedgie looking formation. If this starts to break, the whole analysis changes, right? But for now, we're going to look for some kind of a correction at some point. This is same as the World Stock Market Index. Hello, Alessandro. How are you, my friend? Welcome. Happy New Year. Um, Jets Airlines are going sideways. You know, we had some big moves, big moves, big capacity. Let me see if I can find it here. Million plus people flying and so forth. I came to where is it? Anyway, I can't find it now. Doesn't matter. I'll find it later. I came to the Ukraine with Turkish Airlines. The airline, the flight was packed, but when I got to Turkey, the terminal was fairly packed, but there was a lot of grounded airplanes. And Turkish is one of the airlines, major airlines in the world that has the most amount of destinations. But they still have a lot of airplanes parked, a lot. I think I shared it with my friends, subscribers, but there's a lot of airplanes parked. Now, here's the thing about airlines. If the vaccine goes well, and it's not, for right now we're really lagging on vaccines in the US. But if it goes well, let's say we start to catch up, and remember, it doesn't have to be that 75%, right? We care about the deaths. We care about the fear. So you really have to vaccinate, what, 60 million Americans that are over the age of 65 to have the most amount of impact in terms of death, right? And I think that's doable. I think that's doable in a decent amount of time. So let's say April. Um, but they need two vaccines, right? So again, how they implement it is gonna matter. But if we can do a good job and we can start seeing some growth in the airline uh, passenger flying, then the hiring would have to start somewhere in April, March to get ready for the summer season. Um, and if they see bookings that are, rising for this summer, then they're gonna start to ramp up training. Now, training is limited by simulators. There's not a lot of simulator space for the amount of hiring that's going to be required. So that's going to be interesting how they're going to deal with that. But I do expect there will be some kind of ramp up going into the summer. Now, if vaccinations don't go very well, the bookings are not there. It's going to be, we're going to see that in the airlines. I'm going to see that because I'm obviously an airline pilot and I'm looking for a job, right? So I want to see how many job availabilities there are. For right now, there's some starting to come around preemptively, right? One is Bamboo Airlines in Vietnam. China has been hiring for quite a while. Uh, and I think there's one more in Vietnam. Uh, they're starting to hire instructors, right? Instructors that will come first and then everybody else. So ramping up. Delta said there will be, they're going to be increasing their flights by spring. Again, you have to be careful with the CEOs because they're always going to push the envelope. They're always going to make it seem as if everything is great, okay? And then if it's not great, then it fails, and everybody gets fucked. So be careful with these CEOs. You want to see it in hiring. If they're hiring, they're spending money, investing money, then it's real. Forget about what they say, and I'll keep you guys in tuned with that. So for right now, the airlines are going sideways. Okay. Look for We were looking for a breakout here, but it's not materializing. In fact, it looks like a bear flag now for another
Auto
wave down.
shutdown initiated.
Oh, this thing is gonna fucking break my balls. Hold on one second. Let me see if I can turn this off. What a pain in my balls.
Auto shutdown canceled. Mic off. Mic feedback off. Mic on. Mic feedback on.
All right. Unfortunately, I can't fix it right now, but anyway, let's continue this. Anyway, this looks like a bear flag. It's breaking down. Look for another wave down in airlines. Okay. So again, risk off, right? That's a risk off. Mm, all right. This is my little indicator of shitty little stocks, catch-up plays. That's going sideways. Nothing there for now. China, look at that, right? We were looking for this to break down. It didn't. New all-time highs, kicking ass. So that's doing great. And again, U.S. hiccuped and the rest of the world catches cancer is not playing out, man. It's not. There's definitely shift in paradigm. CQQQ, I said that this one was a good buy. This is the fangs of China, and it's doing really good right now. From where we set to buy it to where it is now, it's up 7.8%, 7%. All right, we had a little bit of a scare back here right before the Christmas holiday, but it came back, tested, and then just took off. Right? And that's what we expected. So good. That's a good call. Um, Nifty 50 is breaking out to all-time new highs. Japan broke down and then broke back out. And again, this is what I'm talking about with the wedges. Breaks one way and then does the opposite. All right. So Japan is doing good. Right. Taiwan is kicking ass all over the place. Korea, Cosby, beautiful move to the upside. Saudi, look for this one to push to the upside as well. Australia, okay, still building some pressure here. Look for more upside. Brazil recovered, going higher. Um, Emerging markets are kicking ass again. Okay, and remember, weak dollar, good for emerging markets. The BRICS breaking out. Here's the arrow that we had before, right? Before the holidays, I said look for this one to push to the upside. Sure enough, it did. So that's good. Um, Real estate. We're still waiting for the upside, still correcting through time. I want to talk more about real estate, but I think I'm going to do that with subscribers because there's a lot to be said about this. We're going to have to talk about this. Financials continue to push higher. Right? The pure banking ETF pushing higher, kind of right? Not too exciting. Oil, right? Nice little pop and pulling back, and we said this was going to hit 50. We've been saying that all the way since 44. And sure enough, it did hit 50 today, so that's good. Right? Um, Gold, how long we've been saying, look for the breakout. There was some scares in here, some drops and so forth, and we're going to talk a little bit more about gold and Bitcoin and so forth, um, and commodities overall. But very nice little breakout. Look for this one to continue. We also talked about silver. Okay, Look for this to continue. Commodities overall, so bullish, so nice, so nice, right? And we're going to talk more about this stuff, okay? So the ETF for all commodities is Delta Bravo Charlie, okay, DBC. Precious metals breaking out. We had this already pegged, okay? That's what these arrows means. Um, Base metals are kind of going sideways. Again, I think they're just going to correct through time and then push higher. And I'm going to put the arrow here so next time we talk about it, I can say, yep, we were looking for the upside. Steel breaking out. Palladium bouncing. Copper building pressure. Agriculture, look at that. And this is not good. I've said this many times. This is not good. You don't want supermarket prices to start to rise, right? You have a weak economy, high unemployment, and now you're going to start to see that you're going to have supermarket inflation, and people are going to start bitching. This kind of reminds me of an economy of Greece, like I was talking about. That the basics were very expensive: gas, meat. Right?
Auto shutdown initiated.
Oh, come on.
Auto shutdown cancelled. Mic off. Mic feedback off. Mic on. Mic feedback on.
Sorry, guys. I did everything except fix this stupid thing. Anyway, right? So this is not good that it's breaking out. It is something that we did predict would happen, and again, it's this everything, uh, buy everything. Everything is bullish, and now it's starting to translate into commodities, and commodities is a very small market, so you can see very big moves, and eventually people are going to start to feel that inflation. Um, Now remember that the Fed only looks at core inflation, ex food and energy. So oil going up to 50, right? That's inflationary. Um, Agriculture going higher, that's inflationary, but it's not something that the Fed looks at. Right? So just keep that in mind. But people do look at those things. Sugarcane breakout. We had the arrow here. All right, corn. Corn, we expected a correction here, so I should even take this off. I don't know why it's still there. But look at that, incredibly bullish. Huge breakout um, from this longer term trend line. Okay, again, not good. Wheat breaking out, soybeans breaking out. All right, Bitcoin. So what's going on with Bitcoin? You want to keep printing? Bitcoin will keep going up. Uh, the whole move started that PayPal is going to start to accept Bitcoin, right? And it's becoming more widely accepted. Um, and it's off to the races. Now, how high can this go? It depends how you want to measure it. If you measure it by market cap and you assume that it has the value of the best stocks out there, Apple, you know, Microsoft, whatever, then in that case, you can easily see this over $1 trillion market cap. And at $27, I think it was a market cap of 500 billion. So we can expect that a $54, I'm sorry, $54 my ass, $54,000 price tag is not unreasonable. Uh, and I've said that, if we get to, well, let's go back to the summer of 2018. I said, you want to buy Bitcoin below 5,500. Okay? Buy it, trade around it, buy it. It's going to go much higher. Why? Because it's not going to go away. It's not going to go away. And if it's not going to go away and it's going to be widely accepted and there's going to be faith in it for whatever reason, you agree with it, you don't agree with it, doesn't matter, right? The utility of it, where you can transfer money from one place to another, governments can't check it, right? The utility of it and then the faith in it will make the prices go higher. Now, from a charting perspective, we knew that this is a 1, 2, 3 up, and this has been one of the best markets for me personally to trade, only because it trades like it's supposed to in terms of charting. Okay, 1, 2, 3 up. It's beautiful. It's a beautiful breakout. And it's exactly what it's supposed to do based on the chart. All right. Um, so again, if we look at it from a valuation of a company, $1 trillion is not an not unreasonable. I think I can do it. So that means $50, 50,000. What if we value it um, against all the money in the world, right? What is it? 320 trillion, I think, dollars are available in the world, right? What if we create a float of 3% of that, right? You start getting into fucking crazy numbers. Uh, you know, just think of the the cute story behind it. How many people are going to want to own a portion of it, a piece of Bitcoin, right? Because you can subdivide Bitcoin to infinity. So even if somebody wanted to own $100 worth of it, then they can own $100 of it. And if they hold it and they forget about it, well, guess what? That reduces the amount of Bitcoins available for people to trade, and that pushes prices higher and higher. You, you don't have to buy one Bitcoin now, right?
Auto shutdown
At
initiated.
$54,000 or whatever, you can buy a portion of it, and I think that's going to attract a lot of people over the course of time, especially as printing goes higher, especially as certain currencies start to devalue and have issues. So, the upside on this is really, I don't know, anywhere between a trillion and much, much more in terms of market cap. Okay. Now, Adam told me that the market cap as of yesterday was a trillion in all cryptocurrencies. I would focus more on Bitcoin, not necessarily all currency, all cryptos. Okay. I think that's the one that's best. Not that Ethereum is not good, but I'm just saying, just stick to the market leader. What is this? Litecoin. Okay, nice little breakout. Still not at all-time highs. Ethereum. We said that there was going to be a wave three, right? There was a wave three coming. Give me 1 second, please.
Auto shutdown cancelled. Mic off. Mic feedback off. Mic on. Mic feedback on.
This is so fucking annoying, this thing. Anyway, we said there was a wave three that's going to come. Go back to the old videos, you'll see it. Right? And again, this is what I love about the cryptos. They're not manipulated. There's not the same kind of fuckery going on in cryptos that there are in the real markets. Uh, Not that this is not a real market, but you know what I'm saying. Right? So you got the one, you got the two. Here's the wave three that's coming. We're going to be at all-time highs here soon enough. Right? Look for some pause, some kind of pullback, and then a continuation to the upside. Um, with with Bitcoin, let me go back because I didn't really analyze it that well. When you start to see it go vertical, right? When it starts to accelerate, it starts going vertical and then starts pulling back. Don't be afraid of these pullbacks. This is quite normal. Okay. Um, Look for more upside. Look for more upside. I know it sounds crazy, and I know it feels like it's up too much, and it's up now 65% since December 20 something, 28th or whatever, right? It's once this thing gets going, it's off to the races. This is in wave three right now, right? So there's a lot of upside. There's a lot of upside. I know it sounds crazy. I do. I get it. Believe me. All right, Ethereum. All right, we talked about that. This one had some major problems, Ripple, and that's why I don't like to trade anything else other than Bitcoin. Um, Ethereum, okay, maybe, right? But I just stick basically to Bitcoin. All right, the dollar. Dollar is weakening again, right? New low, popping back up. Now we are looking for a correction from this move here, but for right now, it's starting to look more and more like a range expansion. And there's a lot further downside to the dollar. All right. So I'm going to take this arrow off for now because it had several opportunities to break out and didn't. So look for more downside in the dollar, which means bullish for gold, silver, Bitcoin, Ethereum, right? And stocks. All right, let's see. The IMF money, all right, the special drawing rights look very bullish. Still haven't touched the previous high. We do expect that at some point it will. US dollar, Japanese yen. Let me flip this back over. Right, new low. Okay, just grinding to its death. Right, just keeps grinding and grinding. Euro US dollar still hasn't made a new low this year so far, but I do expect this one to continue higher. Great Britain pound. Finally, we're getting that breakout. It's slow. It's a slow breakout, but that's okay. The slow, grindy shit is what puts people to sleep and keeps on going. Right? But we did get that breakout, and we did have this arrow here. Right? So don't forget that. All right. Dollar, Turkish lira, we were looking for more downside. It's coming. They raised interest rates, so they made it more expensive to short the Turkish lira. US dollar is weakening against the ruble. US dollar is weakening against the CAD. Australian dollar continues to push higher. We've talked about this for so many videos. I'm tired of saying it. New Zealand is pushing higher. The peso is matched the previous low, so the dollar keeps weakening. And dollar won. Wow, right? Wow. All right. So now we're getting into an interesting area that, it really has to hold here. It really does. Right in here. It's going to have to hold. We're going to expect a bounce. It's actually, I think, even tradable from a risk-reward standpoint. I think that will be a good place to, at least for a trade. Okay. But again, a lot further downside for the dollar is in store. Euro index breaking out. Still hasn't made a new high yet for this year. We look for this one to continue to push higher. And again, this is the compass. That's what we were talking about, right? This is the compass here, and we're going to look for this wave 3 to continue much higher. Okay? So you want to be short dollar in just about every pair. Let's talk about interest rates on the 10-year. It's still hovering at that 93 area. We expect this one probably to push higher as well here early on in 2021. 30-year. Okay, just kind of doing nothing sideways. Bonds, we're going to look for this one to push higher. Shy, sideways. Stupid, nothing there. All right, let's take a look at the riskiest catch-up plays. There are Royal Caribbean. it's in a bear flag as well. So we look for another push to the downside. Here's the bear flag right here. Okay. So let's see how it's going to hold when it breaks this trend line. We expect for it to do something like this. Okay. I'll leave that there for now. Norwegian, not doing a good job of following through. Carnival, not doing a good job following through. All right, so let's take a look at the fangs. Double top on Apple. Amazon broke out, continuing its march on a small kind of channel formation. Let's see how this is going to behave. Microsoft, right? Kind of going sideways here. Facebook broke out, structure above a structure. Let's see if this is going to push higher. Netflix continuing to grind higher. Google, we want to see a push here, but it's not doing a good job of it right now. We're going to see. Nvidia, look for Nvidia to break out. Probably we're going to see new all-time highs in Nvidia at some point. Right, that's a nice little buy. Let me mark that. So nobody can say I didn't say it. All right. All right. So we're going to look for this one to break to new all-time highs. All right. Okay. Tesla. Now it's reached what, 700? Yeah, baby. Now we said this can go as high as 850. Okay. 850 for Tesla. PayPal doing a nice job breaking out. Snapchat. I think this one is going to be a buy here at some point. Okay. In terms of airlines, just to kind of go through them quickly, Delta is pulling back, American Airlines pulling back. Now this is interesting. Southwest. Southwest has the most amount of cash out of any airline, and it's starting to break down from this channel. All right. That's not good. That's not good, my friends. That's very bad for airlines. Alaska pulling back. JetBlue, Spirit, Allegiant, Hawaiian, Skyway, Ryanair, EasyJet. Yeah. So it's kind of interesting because the market leaders are not going higher. The laggers are not doing, all that great, right? The airlines, the carnivals, the so forth. Um, the small caps are not doing a whole hell of a lot, but the market is up, right? It's in a grindy kind of move upwards. Right, so we're going to see how this plays out. Let's see how long this lasts. Give it a couple days. But, the message of the market right now is just kind of a slow grind higher. Nothing is really leading, except for Europe, right? Europe is doing good and Asia is doing really good. So I think that's the areas to focus. Asia, Europe, and commodities. Okay? That's what it looks like so far. That's what it looks like. All right. So let's kind of go down to the smaller time frame. It should be what, 10:30 almost, or 10:21. All right. So we're going to see for the 10:30 reversal. So let's do some day trading kind of looking stuff here. This is an hourly. Okay. All right. So we made new all-time highs. Fair enough. Then we get the pullback. So we expect it to come as low as 12,819. Point of control. At this point, we have to adjust it all the way back here. Okay, so point of control. So right in here, there's a confluence of support, right? Right in here. Right in there. Again, we're not seeing the market leaders, the Googles, the Fangs, Apples kicking ass. We don't see the small caps kicking ass. Airlines are not, the catch-up play is not there. So look for probably a deeper pullback into the point of control. It's probably my best guess for today. Reading the message of the market, right? Okay, so now breaking the bottom is not necessarily bad. It would just correct this wedgy looking formation that's going on right now. Let's take a look at the S&P. It's in the middle of nowhere. Dow Jones, middle of nowhere. Small caps. They still have not broken the flag. Okay. So again, short on the Russell, long on the Nasdaq. I think is probably the best bet right now. Right, you're not looking to kill it. You're just trying to make a little bit of money, and that's a nice little risk reward in the direction of the trend. UK is up 2.27%. Europe is up 1.96%. Germany is up 0.62%, and Denmark is kicking ass 2.65%. All right. VIX is pushing. See, I can understand the VIX being high initially. Uh, everybody's like, okay, let's see what's going on. So you add some protection, but I don't expect this to keep moving higher. Let's see if it starts breaking that previous high, then that would concern me as a bull, because it's increasing, not decreasing. So you get the spike kind of move, you get that spike, and then it starts to kind of go up, and then maybe you get something like that. But when it's going straight up, that's not a good signal for the bulls. Equal weighted S&P is right back into structure. Interesting. It's always very difficult to try to, you know, with an hour of trading, trying to figure out what the fuck is going on, but we'll do our best. Again, my bias is still to the upside, right? Until shit starts to break down. All right, let me go have a smoke. I'm going to come right back. I'm going to leave this up on the NASDAQ. Okay, so this is where we expect it to come. Somewhere down here. This would be a good buying opportunity. Okay. All right, I'll be back.
Mic off. Mic feedback off. Auto shutdown initiated. Auto shutdown canceled. Auto shutdown initiated. Auto shutdown canceled. Mic on. Mic
All right,
feedback on.
here I am back again. Had my little smoke. It's freaking cold. It's Ukraine, man. And they tell me it's gonna get a lot colder. All right. Um, so again, the 1030 reversal is showing weakness. Again, we're expecting this to go lower. Um, give me 1 second here. Okay. Now, I want to have a little bit of a conversation with you as to how I view everything. I think it might give you a better understanding why I think the way I think and why it's a benefit to live in so many different economies throughout my life. And again, looking at through a lens of economic, real macroeconomics, which means what? Well, what it means is that I only care about things that I can verify and I can look at and I can point to and I can say, yep, this is the way it works. And I've used the Austrian lens and the MMT lens and you know the way people think in different economies and different cultures and how they live. Okay, so for example, here in Ukraine and Greece, I would say uh, people don't go out to Costco, buy shit for like a month and then bring it home, store it, and off we go. Okay, they buy what they need for that day, whether it be for financial reasons or whether it be that they don't have big enough homes to store shit in. It doesn't matter, right? You go to the supermarket, you get what you need, maybe 1 2 days, and if you have enough money the next day to go buy it, you go buy it. If you don't, you don't. And that seems crazy to an American to think like that. Not that some Americans don't live like that, but I'm just saying as a general rule of thumb, that's not the way Americans operate. And that's why I think in recessions, the Europeans do a lot better job of weathering the storm than an American would. Um, so let's take it from the MMT perspective that money doesn't matter. Just print whatever you need. And you're just the average Joe Schmo who doesn't know anything about economics or anything about anything, right? You don't give a shit about financial markets. You hear about them. Stocks are up. You look at your 401k, it's up. Everything is great. Fuck it, whatever. Right? You're just a normal Joe Schmo. Do you care how many trillions are pumped? No. Yeah, you don't care. All you care about is can you find a job? Can you pay your rent, your mortgage, whatever. And that's it. You go about your day. And um, that's one way of looking at it. Well, what about it from the investor standpoint? Uh, Markets are going up. Who gives a shit, right? Keep printing, baby. I'll keep buying, keep pumping me with savings, and I'll keep buying stocks and bonds and whatever. Okay. Oh shit. There's so many things that are not set up on this thing. Anyway, um, I wanted to show you something, but anyway. But there is a point where the investor and the normal Joe Schmo are going to collide. Okay? And we see that in agriculture right now. You're seeing it. When the money flows from stocks, bonds, and there's just an abundance of money everywhere. Um, Eventually, that money is going to make it into commodities. And when it goes into commodities, like, as I told you before, it's not a good thing because you're going to start to see it in the supermarket, and that's where it all starts to come together. All right. So you start seeing agriculture break out, and you start to see sugar going up, and cereal going up, and everything is going up. Corn is going up. This is where everything starts coming to a head, and reality starts to hit for different reasons, from different perspectives, but it does start to hit. Now, we said the commodities will start to rise only because there's not enough interest in bonds, right? I bet this year how many, savvy kind of people gave their kids a Bitcoin, or a portion of a Bitcoin or whatever, rather than a bond, right? Not a great abundance, but I'm just saying, right? Think about that. That you would much rather go out and buy a Bitcoin for your kid than a bond that's not going to give you 0% interest for the next 10, 20, 30 years, essentially. Why the fuck give them a bond? That's fundamentally different way of thinking than the traditional way of thinking was, right? Grandparents and so forth. Um, it's kind of boggles the mind a little bit. Now, when you turn bonds into stocks, meaning that you're not getting interest on that bond anymore. You don't care about the interest because it's not there. And you're buying it only because it's backed by the government. The government will always print and, push asset prices higher. Asset, in this case, being bond, the bond price appreciating. then you want to keep buying those bonds. They're safe, right? But then there's the law of diminishing returns. That the more you print and the higher the price, the higher the price has to go in order to give you the same percentage return. And eventually, if it doesn't give you that return, why would you buy a bond? Right? Why would you buy that stock? And we know from stocks that once a stock kind of stagnates, right, it goes up and starts to stagnate, eventually it starts to fade away. People give up on it because they're not getting that return. So from the mechanics of investing standpoint, at some point you're going to get that bond sell-off. Okay, if you look at the amount of foreigners that own U.S. Treasuries, it's gone down. Okay, and it's continuing to fall. What does that tell you? Right? Well, Americans are owning the bonds. Woohoo! That's a good thing. It's our debt, and we own it. Woohoo! No, don't think of it like that. Think because no one is going to own a bond for patriot reasons. Oh, I'm a patriot, and I'm willing to lose money and hold the bond and not sell it. It's not the way it works. So when everybody starts to sell, right, everybody's going to sell. It doesn't matter if you're American or not. You're going to sell it. But what does that indicate to us? That the foreigners are not buying as many U.S. bonds as they did before, right? There's a little bit of a shift in the world reserve currency, right? That we're starting to weaken that strength that we had as the world reserve currency. Now this could change. Could change tomorrow. I don't know. Maybe it'll change in 2021 and more foreigners will buy U.S. Treasuries. I don't know. I don't think so, but whatever. But again, looking at things from my perspective right now, the way things are. You look at it from the Joe Schmo perspective of every day. They don't care until it starts hitting the supermarket. You look at it from the investor standpoint, right? Why own a bond when you can buy a commodity that's way undervalued? And you can see that here, right? Agriculture, it's down a substantial amount. We can measure it. It was down as much as I can see 70% from the highs, right? So you have a portfolio and you're looking at two asset classes that are giving you essentially just price appreciation. You're gonna start dumping a little bit of money into commodities, right? That's the money flow shifting. You start dumping in a small market like commodities, some money, price starts to rise, it starts to hit the everyday Joe Schmo. Now, in the U.S., uh, people are going to start bitching. What about overseas? What about the Ukrainian or the Greek, who are already paying higher prices for basic things, right? That's going to impact them more than it's going to impact an American, unless the dollar continues to devalue, right? And that's what's happening right now. We know that, right? We know it's devaluing. Now that doesn't necessarily matter because the U.S. can produce a lot of everything, right? But it does matter when you're importing. And the U.S. is a net importer. It's not like Japan. It's not like Europe. So when you're importing, the prices are going to start to get more expensive as the dollar depreciates. I think it's down, what, 12% from its highs. 13% now. Okay, so it's broken this big trend line here. Continues to fall. Now Biden can come out and tell you, oh, don't worry about it. Whatever money printing they're going to give you now, it's just the beginning. We're going to print more. We're going to do more. Yeah, well, that's limited. You can print more, you can do all these things, but you're going to be limited by the amount of dollar depreciation there is. And again, once you start seeing that inflation and food prices and other prices start to come up, and remember, food and energy are not calculated in the core CPI that the Fed looks at. They're going to tell you again, there's no inflation. There's no inflation. So you get stuck. Just like asset price appreciation is not considered inflation by the Fed or anybody else. The Fed would tell you, no, asset prices are fine. Well, how the fuck are they fine? How are they fine? They're at all-time highs in one of the worst economic, disasters in 80 years, 90 years, whatever, since 1929. Okay, so population growth, right? It's not that great in the U.S. 30 million Americans being out of a job right now, and the millennials being at that peak age, right, in their late 20s, early 30s. They're supposed to be kicking ass right now, having good jobs, right? Wages should be appreciating. Well, with high unemployment, you're not going to get that wage growth that that you're expecting. You're not even going to have a job. You're going to have wage suppression. Well, if these people at their prime, they would not spend the same as if there was no COVID or this disaster. If they're not going to spend the same, then what happens to consumption? Right? We had that 68% of GDP's consumption, where the consumption starts to suffer. And if you're paying higher prices for food, um, that's going to bite into your, what you can buy, the disposable income. Things that we import are going to become more expensive, right? That's going to take away from that as well. Okay? God forbid interest rates start to rise. Now you're really fucked. You're really fucked if interest rates start to rise, because if if you're someone that has high debt, and usually these millennials at this age, they do have that higher debt building, babies, cars, furniture, houses, rent, whatever. Um, you end up in a scenario where again it takes away from that consumption. And if you're taking away from consumption, you're taking away the economic activity, the GDP growth. So, most people, they don't look at it this way, and I don't know why. And I've been criticized. Oh, you're not an economist. Well, to me, an economist is not a piece of paper. It's somebody that can understand the economy. And from the beginning, when all this started with COVID, I said, look, you're going to start seeing airlines suffer, retail, okay, stocks. That's exactly what happened, but the stocks only fell for 33 days, some ridiculous number. Sorry, let me go back to this NASDAQ. What the fuck? There it is. See that drop? Like we were talking about? Mm-hmm. Yep. There it is. All right, but again, don't get bearish with this shit. Look for a buying opportunity here, okay? Look for a buying opportunity. Not here, but lower. All right, so let me continue. Yeah, so then you start to think of just real basic logic questions. Does it make sense to you that, well, the only problem there is vaccinations? Well, we're just going to vaccinate a recession away. Well, prior recessions, they need vaccines to recover. It's just logic. It's basic, right? Doesn't even make sense. So just because a vaccine is here doesn't mean it's going to fix the economy. Although so many people all over Twitter, social media, this, that. Oh yeah, when the vaccine comes, then everything is going to be fine. No, it's not going to be fine. The vaccine is only part of the problem. The amount of damage that has been done to the real economy, the scarring, as they call it, is real. It's not going to go away. You can't vaccinate an economy away. You can open up whatever you want. Doesn't matter. Look at somebody like me. Right? I'm 51 years old. I didn't plan on retiring, although I have thought about it. Right? But I didn't plan on it. I haven't worked now almost a year. Okay, so that's a year of my working life gone. That's an income that I'm not going to make up, and I don't know how long it's going to take. My income is more than the average person, so my income alone is the equivalent of 3 people, if not more. Right? So my consumption, it comes from savings now. Okay. Um, Now, in my case, I didn't do. Um, I was prepared for this. In other words, other people are not prepared for this. Other people, um, they were caught off guard in a weird spot in their lives where they probably had a little bit too much debt, right? That they were in between jobs or something like in that, starting a new job or something like that, and it went south for them. These people, they're not, they're middle class. These people, they're not going to recover from this very quickly. Okay? We don't know what the new economy is going to look like. And these people are making a lot more money than the, lower middle class. So they count more so. You look at the rich, right? The billionaires. They made $1.4 trillion in 2020. Okay? $1.4 trillion. You think they're going to go out and spend that money? They're not going to go out and spend that money. So it ends up in asset prices. You look at the poor, okay, $600 paycheck is nice. It helps. They can do a lot with it. Not someone that's, has a pool in the back and, big house to heat and cool and so forth, okay? Um, these things are fundamental. They're basic, right? So consumption is not going to come back as quickly as they think they are. And as a result, the earnings per share going forward is not going to be the same for all the reasons I just mentioned. And if it's not the same, if you can't consume, you're not going to produce. If you're not going to produce, right, you got that stagnation going in the economy. Now, from 2008, it took us a very long time to recover. I think it's going to be the same going forward from here. Okay? And anybody that tells you, well, the markets are disconnected from the economy, who told you they're the same thing? They are the same thing. They are the same thing. The fact that, there's going to be repricing because there's so many more trillions of the world doesn't mean that it's disconnected. Think of it like a rubber band. Okay, market can stretch. There can be a multiple expansion. You can stretch it. Eventually, it's going to snap back. All right, that's the way I look at it. I don't believe for a second that the market and the economy are not intertwined. I don't. Okay, because everything is based on earnings per share. And as long as companies can buy back share, which is what was happening for 10 years, right? It reduced the amount of shares and increased the price. And now we're seeing that we have so many IPOs that are coming. What do IPOs do? IPOs are the opposite of buying back stock. You're expanding stock. You're increasing the amount of stock available. They're giving you supply. Okay, and that supply initially is up 200 some percent with that IPO thing I was showing you before, right? Kicking ass all over the place. Everybody's excited. Robin Hood the shit out of it. Go out and buy Tesla and whatever the fuck. Lyft and whatever. It's great. It's fun. It works. Everybody's happy until they're not, because that's going to reverse at some point. It's going to snap back. It's just logic. It can't go up forever. I'm telling you, it can't. Right? And I know I sound crazy, but it's just the way it is. It's just basic. I don't know. Let me stop here, my little rant. But see, we're coming back to that point of control, right? This is the area we were talking about this morning. Okay. So anywhere near the point of control, you want to start thinking about buying. All right. You want to start thinking about buying because the risk reward is least somewhere down here to start seeing a nice little bounce. All right. And we said there was that 10:30 reversal. Now the time is, I think, 11. Okay. Let's see how much lower this can come. Okay. Um, yeah. Now remember, the point of control is from the previous low. Okay. Down here. Get rid of this. Okay. Yeah. Um, I don't see how the economy is just going to naturally snap back. Are you going to have some demand? Sure, there'll be some pent up demand. Uh, that's fine. So let's look at it from this perspective. We know that there's been lockdowns, and we know that these lockdowns are going to be reflected in future GDP growth, earnings calls, and whatever. We know that's going to be an impact. And then we know that once the lockdowns are over, things are going to snap back. There's going to be some kind of a correction to the upside. We know that. You don't have to be a rocket scientist to figure that out. People are going to sell that. They're going to say, "Oh, it's better than expected." It's always going to be better than expected. By the way, well, the lockdowns weren't as bad this time around. Look at the recovery; it's better than expected. Everything is better than expected. Um, America's been great since 1776. Blah blah blah. but that stuff is garbage. So when you're looking at the economic data and you start seeing these things bounce, right? Drop and bounce and whatever, that doesn't mean shit. It doesn't mean anything. It's the long-term scarring that you care about. Okay? It's the long-term scarring that you care about. And you'll see that in unemployment more than 26 weeks when it's remaining very high. Okay? That's the stuff that you want to look at, the meat and potatoes, the basics. And eventually, when reality sets in, you're going to start to see the market stagnate, reverse, correct, whatever's going to happen. It's just how long is it going to take for people to realize that the scarring is much deeper than anybody expects, right? So again, my analysis, my point of view, uh, I think there's a lot more scarring into the economy, and I'm a meathead when it comes to this. I don't care what price does. I care what value is. Price is what you pay. Value is what you get. I like value. I don't think there's a lot of value at all-time highs with such deep economic problems. Okay, doesn't mean I can't trade it to the upside. I can. I can use my bare knuckle charting to find some good risk rewards to the upside and whatever. That's fine. But long term, buy and hold. I rather buy beaten up stocks that have value, that have reduced their price sufficiently, where even if it goes down 50% from there, I'm comfortable with it. Even if some of them blow up, I'm comfortable with it. Okay, um, that's just me. Everybody has their own way of doing things. I'm just showing you my way, and sometimes just to see things from a different perspective is good to kind of give you questions. Okay, and I hope I can at least give you that value from all this. All right, so give me 1 second here. Okay, sorry about that. All right, so we're gonna look for that bounce now, and in Nasdaq. Okay, it's down 0.88% for the day. S&P is down 1%, and Dow Jones down 1.86%. NYSE is down 1.35, and uh, small caps are down 2%. Okay, there's a bear flag that broke that we were talking about. All right, now let's see if this is going to lead to something more substantial. Now, in the small caps case, what we need to see is that it breaks this low. All right, because then you're going to end up in a scenario where you have a lower low, and that's going to be quite bearish if that does occur. So we're going to put this line here. All right. Anything above this is going to be bullish, of course. All right. Now we want to see how deep this pullback is going to be. It's quite sharp. It's quite sharp. So it's a continuation of a 1, 2, 3 down. Right. So let's see what that does. All right. Transportation is down 1.7. All right. Again, this would be a point that you would consider to buy. Not that you can buy transportation averages, but I'm just saying. All right. So that's in a sense bullish. IPO take this to, there we go. IPO is starting to break down. So that's kind of interesting. Right? This was a market leader. ARC is still okay. The fangs are pulling back. They had a little breakout here. I don't know if we can qualify that as a sufficient kind of break, but nonetheless, it is breaking back down towards that point of control. Europe is doing fine. UK is doing fine. Germany is doing fine. Right. So Asia has not been affected as much, and these are one of the market leaders. China, nice little breakout, no problem there. The fangs of China doing fine. India, bullish. Japan, not so much. Taiwan is doing fine, right? So we're not really concerned with Asia or Europe. This is mainly a U.S. problem, and I'm wondering if it has to do with this bullshit that Trump is trying to pull, making the markets a little bit nervous. Demanding uh, that Georgia flips their state. Crazy, stupid shit. Um, the guy's insane, right? But anyway, I wonder if that's something that's affecting the markets. I wonder also if it's this who's going to control the Senate. If that's also has something to do with it. The markets are right now showing that the Democrats are winning in those states. I don't know if that's something they're looking at. We'll see. Let's take a look at Bitcoin. See what that's doing. But again, to me, this is a buy. I don't see a fundamental problem. Just a normal correction and a slow grinding move to the upside. Oil, wow, big pullback. That's interesting. Let's see if this breaks down because now we are ending up in a situation where we have that gap up here. Huh? So let's see if it bounces here. If it starts to break down here, and I don't mean just a break of the line, I mean a fundamental move to the downside that kind of looks like this, something like this. If it ends up something like this, then you look for downside. I don't know if we're there yet. But this is definitely a subtle kind of weakness. Right? Didn't have enough strength to make it to the top of the channel. Hmm. Anyway, for now, the bias I think is going to be to the upside in oil. Um, until shit starts to break down. Give me 1 second, please. Yeah, I think oil would be a buy here. All right. Bitcoin is starting to sell off a little bit here. I got no problem if it comes back down to 29,000, right? Maybe even lower. Let's say it comes like a sharp down move now, it would be about 27.2. All right. We've seen this move before. I mean, how many times? We saw it in, what was it, Thanksgiving Day, right? So that sharp sell-off, no big deal. This is a minute chart. Yeah, see these kind of moves, these sharp sell-offs, typically, not always, typically are just there to provoke emotion, right? Price is an advertising mechanism, right? It's there to prom- to provoke some kind of emotion to make you go short or whatever, go long or whatever, right? They wanna fuck with you. When it comes into key areas, and if you chart it properly, you will know where that area is, right? And that's where the best risk reward. That's the whole point of bare knuckle charting, is to find the best risk reward points to go out and invest, right? If it goes your way, you're gonna have a very nice return. If it doesn't, you stop out, take your small loss, walk away. All right? Nothing wrong with losses. Losses are okay. It's okay to be wrong. It's not okay to stay wrong. Remember that. All right. Let me go have my cigarette break. I'll be right back. Anybody have any questions before I take a break? We're going to leave this 5-minute chart. Let's make it a minute chart. All right. So we expect this to start to bounce, right? You can have another move down. You can have another move down and then up. Just leave it like that for now. Let me put the arrow up here in case anybody's confused. We're looking for a bounce in this area. All right, I'll be back.
Mic off. Mic feedback off. Auto shutdown initiated. Auto shutdown canceled. Auto shutdown initiated. Auto shutdown canceled. Auto shutdown initiated. Auto shutdown canceled. Mic on. Mic feedback on.
All right. So one final session before I shut down for the day. Maybe I'll come back later. Um, so there's that H pattern, right? And we said it's okay for it to come down here and then bounce, right? So this is not surprising. All right, so NASDAQ is down 0.9%, S&P 0.95, Dow Jones 1.76, transportation 1.8. Let's take a look at the dollar. Bounce. Now remember, there's a inverse correlation. Dollar down, stock market up. Dollar up, stock market down. And that's why we've been using this. Let's do it real quick. Let me see if I can find the, where the fuck is the star? Come on, baby. No. All right. Now that's interesting. That's very interesting that the Nasdaq in dollar terms, inflation adjusted for the dollar, is breaking down. It's not making a new all-time high. Now that's significant. I didn't pay attention to that earlier. All right, the crossing of the line is not such a big deal, but it can be. We have to pay attention to this. All right. What about the S&P? Did I screw it up? I did screw it up. Mr. Fast Fingers. All right. Not so much in this one. Again. All right. So we'll see. We'll see how this plays out. Obviously, this is just a, I don't know what to call this, a bull flag, I guess. I don't know. We'll give it the benefit of the doubt. All right. Let's see. Now remember, the more time goes by, the more that the trend line is pushing upwards, right? So even if we stay this slow, even throughout the day today and maybe early tomorrow, we're still looking for that bias towards the upside. This correlation, the long, yeah, absolutely, it's a problem. I look. I'm gonna go back to my little rant again. I'm just thinking logically, right? Um, and I just want to make sure that everybody understands the type of bearish that I am. Okay, even if you were to destroy the economic half of the U.S. economy, and you go from 24% of GDP, of the global GDP, it will be 12. At 12 GDP, 12% of global GDP, the US is still one of the greatest economies in the world. Okay, so what is the impact on every American's lives if that were to happen? It would be catastrophic, right? Even though you would still be one of the greatest economies in the world, it's still catastrophic to the everyday American. So you look at Japan for another example. It hasn't grown GDP since the 80s, right? But it took it 50 years, uh, and it's still the number 2 or 3 economy in the world. All right. So what's the difference between Japan and the U.S.? Well, before I get to that part, so how long would it take for the U.S. to become 12% of GDP, of global GDP? It would take it a very long fucking time, right? It would take a long time, but it doesn't mean that the everyday person would not uh, feel the economic impact if it would just stagnate GDP from here. Okay, it would be not good for the everyday American. Um, Another way to look at it: Japan is a net exporter. U.S. is a net importer. What would the world look like if we were to stagnate? Remember, we're the only economy that is major economy that is really a net importer, which means we create jobs for everybody else. Asia, exporter. Europe, exporter. Middle East, exporter. Right. So these, uh, again, I'm not talking about that we're going to collapse, we're going to hyperinflate. This is not the kind of bearishness that I have. All right. Obviously, in stocks, I think there's going to be a bigger correction eventually, if not a stagnation. Right. We'll just go sideways for a very long time. Um, but for the everyday American, in terms of unemployment, long-term unemployment, and so forth, and the impact it would have to the everyday person, I think it's going to be a lot worse than people think. That's the kind of bearishness that I have in the economy. So you want to keep printing money, go ahead, right? There's always going to be um, consequences for that. And you see that in agriculture right now. You see it in the commodity prices right now. You look at the amount of stimulus that was done back in the early years of Obama, right? $1 trillion deficits back then was 10% of GDP. And how much GDP growth did we get out of it? Barely 60, 80% for every new dollar that was created, right? And remember, the dollar was really low that back then. Um, so what kind of GDP growth can we expect for every new dollar that is created now? Uh, I think it's optimistic to say you would get 20 to 40 cents for every new dollar that is created. I think that's very optimistic. I would not be surprised you get 0 to 20. Okay, and you start getting 0 to 20. What do you think is going to happen to the dollar? Right, it's going to keep devaluing. Now you can say, well, that's good for exports, and it is to a certain extent. It is absolutely right, but we're not an export economy. That really changes the dynamics of the world economy. The world is not used to us being exporters and not importers. It's a different kind of an economy, not just for the U.S., for the whole world. So things are different, and when the different, weird shit happens, things start to blow up. When they start to blow up, depending on where you are and what blows up, it's going to have an impact to your investments. Okay. Now, again, as I said earlier in the video, Um, you're going to have this endless and endless of trillions. We don't care about trillions of dollars anymore. We don't care about how much you're going to print. Fuck it. We don't care about that. Yeah, well, eventually you will. All they're looking at are ratios, right? How much are we printing as a percentage of GDP? What is the cause? The cause is COVID. Okay, so if we get a vaccine, COVID is fixed. Intuitively, that makes sense. So all we need to do is just get a vaccine and we'll just vaccinate people as fast as we can, and then we'll go back to normal. Intuitively, that makes sense, but that's not reality. It's not. COVID created the problem. It's it's the scarring that you care about, the long-term effects to the economy, the impact of the economy, the amount of dollars that you printed out of thin air and loaned out, and the zombie companies that you care about. That's what's going to determine how fast we recuperate from this. Um, you know, that's to me, I don't like it. Again, I'm not saying that the U.S. is not the greatest economy, blah, blah, blah. Yes, it is, even if you cut it in half, of course. But that's not the economy that the world or the Americans are used to. A stagnated economy. It's catastrophic. All right. So we are at the point of control, the POC, and that's from the previous low. And we're waiting for that to kind of settle down and start to bounce at some point. Now let's take a look at the VIX. 27. Okay, it's quite high. It's quite high without a moment of relief. And it's a vertical move to the upside. And a little bit of a yellow flag there. Again, the bias is to the upside, but I'm just saying that you got to be careful with that stuff. Um, Let me adjust the line here a little bit because it's moved. Okay. And I don't know if you guys saw it. I'm sure you did somewhere on social media, but they went and vandalized the door of Mitch McConnell. Where's our $2,000, right? Now, again, I'm not against deficits to support the economy, right? The people who are unemployed. I'm not against that. That's not the point. The point is that people are starting to believe in MMT, that the amount of dollars you print does not matter. They don't realize that if you were to give 2,000 and you keep giving money, helicopter money, that eventually these people are going to be hurt because the dollar will continue to devalue and prices will go higher. So they're going to be spending more to buy less. They don't understand that MMT is just a fantasy, right? Sure, in a time of need, you can print and help uh, the unemployed, but that's not what's going on. Right? They're giving money to zombie companies who are not going to be maximizing profit. right? They're going to be focused on lowering debt, and that's not good for workers. That's not good for uh, wages. You have high unemployment, you get suppressed wages. You get a weaker dollar, sure, you're going to stimulate exports, right? But we're not set up for an export economy. I don't know. I just see, I don't know. Maybe I'm too negative, but to me, none of this, from a basic logical standpoint, it doesn't make sense. And then when you understand economics and you look at the economic data, it looks like shit. So like Turkey nominal, yeah, exactly like Turkey. And if in case we have somebody who is new here, where is it? Now, there it is. All right, so here's the Turkish um, stock market. Okay, the best 100. All right, look at it. It's screaming higher. Everything looks great. 1, 2, 3, wave up. It's breaking incredibly bullish. Everything looks great. Okay, now we're going to value the same. We're going to value the same market in dollar terms. Okay, in dollar terms. You see, completely different scenario, right? It looks nothing like what you were seeing, all this bullishness, right? Because in dollar terms, okay, market is going lower. The market is going lower, not higher. Now, as of late, there has been a nice little push higher because you're seeing the Turkish lira appreciate in value. Why? Because they increased interest rates, made it more expensive. So people are buying Turkish lira and selling the dollar. They're unwinding that position. At the same time, you're seeing the stock market in lira terms go higher. So you get both aligned, moving in the same direction, and that's why you see this big move to the upside. Okay, we've seen it before. Okay, typically this doesn't last for a long time, right? But what I want you to pay attention to, and this is what Alessandro is talking about, that's great because he understands the concept, is that you could see the stock market continue on higher, but when the dollar is falling at a faster rate, you're actually losing value. You're losing value as the dollar depreciates faster, right? So not the same kind uh, of of a chart when you remove the Turkish uh, stock market in dollar terms. People have actually lost money, even though it looks so bullish and so great. All right. Thank you, Alessandro. It's important for people to understand this stuff. All right, there we go. Breaking down now. Remember, the breaking of a line in of itself is not a big deal. Once it starts to build that pressure, okay, and create some kind of a bearish structure, let's say it ends up something like this, okay, then it starts to break down, then you're in trouble. Okay. Now, unless we have one of these rare, oh God, everybody starts selling fucking everything in sight and everything collapses, unless we have one of those uh, rare moves, um, the bias still remains to the upside. Okay. Now, remember, on a daily basis, the volatility of a normal stock market extreme, plus or minus, doesn't matter, is about 2%. So for the NASDAQ, it's about 2% up, 2% down. Same thing for the SPY and so forth. If you look at the Dow Jones, it's already at 2% right now. Okay, and NASDAQ and the S&P are starting to catch up. NASDAQ is 1.27, S&P is 1.3. Okay, so we could get a much deeper correction as volatility in the VIX rises. All right. And again, I'm going to say it. The fact that it has not pulled back, it hasn't pulled back, that is bad. That's a red flag here. Because this keeps pushing higher, you're going to have more volatility. That 2% goes out the window, and you can have a very, very bad day where it exceeds that 2%. You start exceeding that 2%, you start panicking people, everybody starts to sell, right? And then you end up in a very, very bad fucking situation. Okay? Things can shift very, very quickly, believe me. Believe me. All right. Nice is down 1.49. Equal weighted S&P is broken down now. Okay, that's not good. Dividend weighted S&P is also broken down. All right, so we're starting to see small structures starting to break. Transportation is at key support area. Now this has been weak while the stock market has been going to all-time highs, so keep that in mind. Okay, this is set to be a leading indicator. And I kind of agree with it because I know airlines are very economically sensitive. So when you start seeing airlines start to go, then the market goes shortly thereafter. So from that standpoint, I agree that the transportation average is a leading indicator. Okay, IPO. These lines keep moving. It's very frustrating. All right, so IPO is starting to break down. Okay, that's not good. ARC, still okay. The FANGs are now down 2.29%. And they're starting to break down from the wedge. Definitely not good. Let me get rid of this stuff here. All right, this is definitely not good. Because remember, it breaks one way and then does the opposite, right? And that's what seems to be happening here. Although I'm not ready to concede that it won't bounce. I don't know if this is enough of a move to the upside to classify it as a failed move in one direction and then break towards the other, right? Meaning that it does this and then down. Usually it's a little bit steeper. But again, if the market leaders are starting to weaken and break down from structures, that's not good. Europe is still holding up okay. It's up 1%. UK is up 1.4%. So that's okay, right? Denmark is doing fine. China is doing fine. So let's see. Let's see. Small caps. Right? There's still no lower low here. So it's still bullish. It is in a wave 3 down. Again, anyway, let's see how this goes, but this does appear to be a 1, 2, 3 down, although a very weak 2, right? This is, I don't even think you can count that as a 2. It's not even countable. Nasdaq down 1.5. All right. Again, remember, price moves like this when he wants to provoke emotions. Now, I know there's a lot of people out there that are making huge determinations that, oh, this is the first day of the year and they're selling. That means they're going to sell the whole year and da, 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 da. Almanac traders. Don't forget about almanac. Okay, there's some years that this applies, some years it doesn't apply. It's just randomness. It's happenstance. Don't. That's not analysis. Right? Remember how the market was supposed to sell off because the 60-40 rebalancing and they had to sell stocks. I don't know how many billions and hundreds of billions. And did that ever come to fruition? No, no, it never came to fruition. That was nonsense. And I told you it was nonsense when they said it. Right? These people are really good at selling stories. Believe me. All right. We're down 1.5. Remember, we can come down 2 plus, 2% plus before it bounces. So another half of a percent, let's say 1% from here, it would bring it close to the previous low, somewhere back here, which will bring us right back to that previous high that we've been trying to stay above for a long time. All right, let's see. Let's see. This is quite interesting. I really kind of wanted to get off. It's lunchtime and this thing is still selling off. It's kind of, I'm very interested in this. Look at that. Mm. Mm, mm, mm. If you measure it from the highs, overnight session, it's 2.72%. That's a significant move. That's a very, very big move at this point. Because we can go from the market open, sure, but you look at the overall market move and it's now 2 point almost 3% down from the highs. Mm, makes me want to wonder. Makes me makes me wonder, if this is not something bigger. But again, you got to stick with what's more likely, what's more probable. And the more probable is that they're trying to scare the shit out of everybody, trying to provoke an emotion. Let's count the Dow Jones from the high. It's down 2.34. So actually, the Nasdaq has fallen a lot more from the high than the Dow Jones has. Hmm. VIX is up 2.279 now. Continues to push higher. Wow. Oil is holding, so that's good. China's holding, Europe is holding, oil's holding. World stock market index is now down 0.9%. Has a little bit more to the downside for the bounce. Airlines down 3.4% now. And there's that follow through we were talking about, right? That was a bear flag this morning, and now it's starting to break down. Now remember that um, even though it breaks a trend line, especially during market hours, eventually there's always going to be that magnet that I've talked about in the past, that magnet that is going to make prices come back up towards that trend line, that support area, that point of control. Okay. Now again, that's normally what happens. Now this could be some kind of a different event. That's very rare. I can't help you with that. You know, if that happens, that's going to fuck everybody across the board. You know, you cannot trade random things. I'm sorry, did I say random things? Extreme things.
Auto shutdown initiated.
You'll lose your ass doing that shit.
Auto shutdown canceled. Mic off. Mic feedback off. Mic on. Mic feedback on.
All right. Now, if you would, I don't have lumber on here. I'm not going to look for it now, but I'm going to put it up here. Now, there was a very big move in lumber earlier in the year, and people were like, "Well, that's just because they weren't working or there was whatever." Well, guess what? We have lumber now at new highs. So that thesis was bullshit, wasn't it? And again, it goes with what I've been saying for almost a year, more than a year now, that commodities are going to be the place to be. Look at that. There's that 2%, right? 1.93% straight down move. Man, this is ooh wee. This could be a lot more than we're giving it credit for. They keep talking about the EU lockdown fears and EU. It's got nothing to do with EU lockdown. EU has been locking down forever and a day. Now, I did read an article somewhere, I forgot to paste it, but someone was really concerned about the South African variant of COVID. Um, Again, you take that stuff with a grain of salt, but it's something to consider. All right, there's that 2%. We just hit it just now. 2.1. There we go, that quickly. 2.1. Buy the dip. Buy the dip. Buy the dip. Remember, 11 years of training people to buy the dip. 11 years. 2.13, 2.14. All right. Let's see if it stabilizes here and starts to bounce. But this is definitely a very, very dramatic move. 28.9 on the VIX. Now remember, the higher the VIX goes, the bigger the daily average move is going to be, right? So if in a normal kind of market move to the downside, the VIX is 25 or 24, whatever, you'll see that 2%, right? That 2% max daily average. Starts going up 30 and 40. I'm not saying it will, but you start seeing 30 and 40 in the VIX. Well, guess what? That 2% goes out the window. Now it's 3 and 4% moves, right? The kind that scares the shit out of everybody kind of moves. All right. Fags are now down 3%, right to the point of control. IPO now is down 3%. All right. Let's see if it holds here for the S&P. It's got a little bit more to the downside, right here. All right, I'm going to leave this up. I need to go do some stuff. I would end the video here, but given the kind of move in the market, I think it's best that I kind of just go away, come back, and once I'm done what I have to do, I want to take a look at it because I think this is very, very important to see how this is going to play out. Because remember, we're going to lunchtime, right? It's 12:15, and this thing is not even bouncing. It's just a straight shot down. Even for small caps, it's just, boom. And, and as we said, with small caps, um, I mean, it's still far away, but if it starts to break this previous low, that's not going to be good. Okay, that's not going to be good. If it does something like that, I think you're going to start seeing China and Europe start to sell off hard as well. We're not there yet, but you know, transportation is starting to break down from the key support area. China now, breaking down much harder. It's almost flat for the day. We'll see. Anyway, let it do its thing. Let it do its thing. And again, guys, if you guys want to see my trades, right, and they're not trading signals, so please uh, don't think of them like that. But you can see my trades. You can come down and join patreon.com/RealMacro. Okay. The ones that get to see my live trades are um, only 1995 subscription plan. Okay. All right, guys. I'll be back. I'm going to leave this up. We should see a bounce, right? We hit the 2% down move for the day. We do have a magnet up here, right there. Okay. So let's see. The bias still remains to the upside. I know it's broken the structure. Let's see if it comes back up to this area, how it's going to behave, how it's going to move back up. What's it going to look like? It's still remaining above the previous highs. Okay, so this is probably going to be a fuckery move of some kind. Probably. I don't know. Okay, so uh, I'll put it on pause and I'll be back.
Mic off. Mic feedback off. Mic on. Mic feedback on.
I think I said pause. No, I'm not pausing it. I'm putting the mic on pause or mute.
Mic off. Mic feedback off. Auto shutdown initiated. Auto shutdown canceled. 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 Mic on. Mic feedback on.
All right. So what it appears to be happening here is that it's bottoming out. There's a W formation here, so we're looking for more upside. Again, this area is going to be a magnet. I'll probably either do a video or come back later, and we'll talk more about this move. Okay. So that's it for today. I have to go do things. I'll talk to you guys soon. Take care and have a nice day.